Believe it or not, there's a single high-yielding dividend-paying ETF that I've been purchasing a ton of over the last few months that is completely changing everything for me. Now, not only is this high-quality dividend-paying ETF helping my dividend income to explode to brand new highs basically every single day, but on top of that, it is definitely helping me psychologically stay more motivated than ever and keeping me super locked in on my strategy, which is definitely helping me and allowing me to reach new highs with my dividend portfolio. Now in this video, we're going to go over exactly which high yielding ETF we're talking about, and I'm going to explain to you some of the psychological benefit I've had as of recently by buying this ETF over the last few months. So if this interests you at all, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So maybe some of you guys guessed it, but the high yielding dividend paying ETF that I've been buying honestly every single day for the last few months, more or less, is SPYI, or the NEOS S&P 500 high income ETF, which I currently have around 390 shares of, and an average cost somewhere between $48 and $49. Now, I came across this ETF a while back, but honestly, it wasn't until a few months back that I dug much deeper into it and really became a fan of what it offered. But before we dig a little bit deeper into the actual numbers, the returns, the dividends for SPYI, along with the mindset that I've gained from buying this ETF daily, let's head over to the NEOS website, dig a little bit deeper into this ETF, and figure out exactly how it works. So first, all right here on the NEOS website, it says looking for high monthly income. And I would say yes, who isn't? The NEOS S&P 500 high income ETF, or ticker symbol SPYI, aims to offer high monthly income in a tax efficient manner with the potential for upside capture in rising markets. Now, some of the objectives are to seek high monthly income in a tax efficient manner, and also on top of that have upside potential when the market turns bullish. Now, this is also kind of cool. It shows that since inception, the NEOS S&P 500 Income ETF, or SPYI, has outperformed some of the largest income-focused ETF peers, and some of these are very popular. And just for full transparency, I personally hold everything in here. So you can see that the blue is total returns. This is dividends plus price return included. SPYI almost has a 20% total return, where qyld has over 12%, jepi has 16%, Devo has almost 16%, and SPYI, of course, the king of all ETFs, has almost 30%. Now, to dig a little bit deeper into how the SPYI strategy works, it says right here, number one, the fund seeks to distribute high monthly income generated from investing in the constituents of the S&P 500 index and implementing a data-driven cover call option strategy. So very similar to other cover call funds out there. In this case, we're talking about the constituents of the S&P 500 index, which of course are great holdings. I don't think any of us would really have any problem with having more exposure to the S&P 500. And then on top of that, the fund manager uses cover calls to, of course, generate premium, which is paid out in the form of dividends. But that's not all this ETF offers. Listen closely. It says actively managed by NEOS, the fund takes advantage of tax loss harvesting opportunities, in addition to utilizing SPX index options, classified as Section 1256 contracts, which are subject to lower 60/40 tax rates. Now, take my word for it, as you build your portfolio over time, and I'm sure a lot of you are already very aware of this, you're going to want to think about taxes because, of course, as you start to generate a ton of dividend income, for example, they might not be taxed very favorably. Now, number three, this is also one of my favorite parts about this ETF, and this is another reason why I really decided on going a little bit bigger in this ETF moving forward. It says the fund utilizes a call option strategy. Not selling options, but buying call options that may include both sold and purchased SPX index options, which may provide the opportunity for upside capture in rising equity markets. So one of the main problems with a lot of these different cover call ETFs is that when you sell a cover call, your upside is basically capped. If the underlying moves up very quickly, you're not going to be exposed to all the upside. But with SPYI, because at times they are also buying call options of things like SPX, that means that if and when the market turns bullish, you're going to have potential exposure to the upside taking place in the market. Now, at this point, we're sort of getting into the weeds, and I really don't like talking about taxes all that much on my channel because I think that taxes are such an individual situation that can be so different, determining many different factors, but also looking at things like this right here. Just for an example, it is in connection with the monthly dividend payment of 47.5 cents per share that was paid back in January 2023, just for an example. it shows that 94% of such dividend will be return of capital. Now, return of capital is going to be taxed differently than ordinary or non-ordinary dividends, etc., etc. And like I said, I'm not going to go super deep into that, but just know that SPYI could be a perfect ETF with a great tax strategy for your portfolio, depending on what your needs and wants are. So now looking at SPYI's performance so far on the max time frame, this ETF is up around 2% in the green, which is not bad whatsoever when you keep in mind that this ETF is paying around 12% yield as far as dividends go. And to be more specific, SPYI has paid more or less 49 cents every single month, with a few months being a little bit lower, since the inception of this ETF, which is around 2 years ago. Now, I know as dividend investors, we're always wary of yield traps because, to be honest, a lot of us have been burned by them in the past, but SPYI, at least so far, is not a yield trap whatsoever. It has an average annual total return of around 12%, or a total return so far over the last 1.7 years of around 21% in the green. Now, this is of course with dividends reinvested, but even with dividends not reinvested, around 11% average annual total return, which still is not bad whatsoever, especially for an investment vehicle like this one that does yield much, much higher than other ETFs across the markets. So now that we went over exactly what SPYI is, exactly how this ETF works, and sort of more or less why I'm so fond of it, along with all the numbers including the dividend and the fact that this ETF has returned around 12% on average over the last year. Because this ETF costs roughly $50 per share, and because this ETF pays roughly 48 cents on a monthly basis. Every single day, more or less over the last, like I said, few months, I've been buying roughly 2, 3, or 4 shares of SPYI, and some days, of course, a lot more. But on average, my mindset is that if I just add 2, 3, or 4 shares of SPYI to my portfolio every single day with cash balance that I have in my portfolio, and the cash balance, of course, is coming from dividends from all the other stocks and ETFs across my portfolio. On a daily basis, if I consistently buy 2 to 4 shares minimum of SPYI, that's going to give me forward an extra $1 or $2 in dividends paid out to me forward over the next month. Now, that's basically the motivation and mindset that I've had as of recently to keep trying to get as much money into the portfolio as fast as possible to let SPYI really generate more income to the portfolio, which it definitely has been so far. Now, of course, I have other positions in the portfolio that I'm still buying a ton of shares of. SPYI is not the only position that I'm buying. But because SPYI does have at least trailing 12-month around a 12% yield, it's really allowing the portfolio's total monthly dividends to move up quite substantially to the point to where I think in the next year or so, we could even see this portfolio surpass $7,000 if we keep working super, super hard. So now that we went over SPYI and I talked about why I'm currently buying this ETF every single day, which stock or ETF do you buy on a daily basis that really keeps you motivated, keeps your head in the game as a long-term dividend growth investor? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.